Hey, good morning, everybody. Happy Friday, coming off of a huge Thursday. We always like that here. Mike and I are in our casual blues because, we don't want to wear out all our green stuff all the time, right? But we're enjoying our Friday. We had conferences this week, which I will end the show with talking about kind of the conferences. I had two myself. Mike and I were in California, and I did one back here locally where I got to be a speaker. And then Mike is going to kick us off with big shakeup going on at Nike, right? The stock kind of liked it. That's again one of our ego stocks, so I'm pretty fired up about that. Michael detail what's going on there, and then he will transition to the story of the day, right? Rate cuts, kind of like what's going to happen from here. He's going to give you his thoughts on that, so you can know at least what we're thinking or our chief investment officer is thinking. So financial education presentation. So do your own due diligence for acting upon anything here in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. With that, Mike, over to you. Take it away.
All right. I had to take off my New Balance shoes to try to find some Nikes, but I don't have any. So, and obviously when I show you the 5-year chart of Nike, a lot of people don't have new Nikes either. And so the big news at Nike happened yesterday. Their CEO, who the company has underperformed for a long time, is retiring from his position, and a long-time veteran of the company is returning, who had retired back in 2020. So I guess they're going for a youth movement, maybe. I don't know. But how did Nike react? And just so everyone knows, Nike is part of our Ego 10, or exponential growth opportunity. And it's not because they've done great over the last 5 years. It's because when we added them, they were basically trading at a 5-year low. And we love the brand Nike because it's solid. And as Steve has talked before, sometimes you have a good horse and a bad jockey. Sometimes it's, opportunities. So how'd the stock react? You got to love it when you retire and your stock goes up 6% basically overnight. And I am sure that John Donahoe has plenty of stock options. So he's probably like, yes, I like to see that in my bank account as I go on to retirement. Nice problem to have. As far as Nike, you can just see the stock, or I'm going to show you the stock. So you can see the up 6% right now. But what I'm showing is actually the 5-year chart. So you can see that this thing has been a house of pain. I mean, I guess if you bought it at the absolute minimum in the the COVID, you could actually be up. But if you bought it any other time, you're down. Since we picked it up in July, it has actually performed really well. It went up before this. I think we bought it around, I don't know, 75, 73, something like that, is when we started putting in. So, heck, I love to see this. I don't love to see anybody being forced out to retire. I love to see companies have a new direction. And speaking of new direction, I thought we'd just do a real quick revisit. The last time this happened, we heard, was with Starbucks. And let's take a look at what Starbucks has done, just so we can see the effect of, out with one CEO, in with a new one. And, Starbucks, you can see the big, uptick when they hired their new CEO from Chipotle. And you can see since then, it really didn't sell off much. It's kind of, it's actually held and went up a little bit lately. So, hoping we see the same effect with Nike where it continues up. So, and then, saw this article in the Wall Street Journal, and Americans are desperate for relief. The rate cut is a glimmer of hope. So, we are in a slowing economy. We're not in a recession that we know of. Unemployment rate is going up, and yet jobs are still being created. So that's good. They're not being created fast enough as people are looking for jobs. That's why the unemployment rate would go up. And the one thing I wanted to really pull out of this article is, what are the effects for you? I'm going to spend a lot of time talking about the effects for clients and investing at our upcoming fourth quarter presentation. But what are the effects for you as a consumer? How does this affect mortgage rates. So you can see that, and what I highlighted here is, lenders were already starting to lower the mortgage rates in anticipation of this. So they're down to 6.09% this month from, wow, 7.79. That's real
Right.
high. So it's getting better. As Powell shared, the upcoming rates, they're expecting, probably to be down 1% by the end of the year, and then further cuts into next year. That will continue to bring this rate down. That's the biggest immediate one, but also let's look at it other places. Anywhere else that you borrow money will get less expensive. So you're buying a car, automotive lending rates will go down. If you have credit card debt that you're paying interest on, let's hope they bring them down. They're sky high anyways. If they drop your 24% rate by a percent or two, you're probably not going to notice that big a difference, but these are different places. The other part is, let's just say it's always two sides to every coin. Where does it affect you possibly negatively? So if you're sitting in, CDs, the newer CDs coming out will be a lower rate. If you're sitting in treasury funds, those will go down as far as the return. So those are just a couple real quick things. If you have money sitting in your high yield, not high yield, in your savings account, well, call us. We'll help you find a better place for it, but chances are they will lower that rate from whatever it is, 2% down to 1% at some point. It's never very high to start with. So, but I really think the biggest one is in the housing market. So if you are one of those people that had to purchase a house and your rate's over 7%, consider when it is time to refi. I've had times when I bought at a higher rate and I refied a year, and then I refied a year later, and you hate to pay those closing costs, but there can be a sunk value, and you just gotta pay the fee and get the lower payments. And the other impact of that is when people refi, sometimes they take cash out, which will also can feed into the economy. So with that, let's turn over to you, Steve, and we'll talk about conferences.
Yeah, you bet. And just to close there, I've been asked several times in the last few days about refining, and my, everybody's situation is different, but I'm saying you generally wait. We have a highly forecasted another 0.5%, 25 basis points, another 25 basis points in the remaining two meetings this year. So I would say eat the higher payment now, continue on the path you're on to be able to refi probably on January 1st, sort of thing. Anyhow, everybody's situation is different, but that's at least what I am telling folks. All right, let's talk conferences. And Mike, if you need to drop, because I know you have a call here soon, just drop off if I'm still talking. Here's the first one we went to. Mike and I were out there. Also had the privilege of having Joel and David with us as well, and a couple of spouses. So when you think conferences, here's my pen, here's my eye sitting in a hotel conference room, and I'm trying to stay awake from panel speakers up there talking blah 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 blah. Okay, the industry knew that we have a problem, and the problem out there is the average age of an advisor, which Mike and I are still on the younger side of. Isn't that amazing? Right.
For another year or two.
Right, yeah, right. We're gaining quickly though. But really it's an old industry and it's not particularly diverse. But there's obviously we're trying, right? As an industry, the macro, we are trying, and getting younger folks involved in the finance business, financial services across the board, not just advisors, is kind of the purpose of this Future Proof Festival. So instead of going to hotel conference rooms, now it's let's get outside and do things. They've had this at Huntington Beach three years running. They also had a retreat up in Colorado Springs where we were outside quite a bit. So yeah, it's more of let's not get all dressed up. Let's wear some comfortable clothes, do some fun stuff together, break bread, learn, share ideas, and focus on what's important to us to be able to take care of our clients and grow our businesses. So we had the four of us out there. You can see there's breakthrough experiences, meetings, and talks over all different flavors. There's a bunch of sponsors out there, so they're kind of covering everything. But it allows Mike and the CIO vertical, in the investment vertical within Ankerstar Wealth, that's really heads down on the portfolio portfolios, allows him to look for more investment ideas. For Joel and David that are satellite, remote offices in Dallas and Vegas, allows them to kind of look on how they can build their business and talk to some folks that have some good marketing ideas and how to communicate their value proposition. And allows myself as a CEO to go to a lot of business development slash M&A type talks to kind of keep an ear to the ground. We're not looking to sell anytime soon, but certainly we may be, if you're not a seller, you're probably a buyer. And that's the case going into next year, 2025, as part of our strategic plan of maybe onboarding a few existing advisors. So we shall see, but great experience. You can see there's different things you sign up. There's some speed dating. If you've never done that in the real world, it's speed dating business style, right? So you share ideas for about 15 minutes, and the good news, even if it's the dumbest idea you've ever heard, you're out of there in 15 minutes. So that was kind of exciting. And then the next one, I'll stop sharing this. The next one was back here in Austin. I did fly back in because they wanted me for their private investing panel. And this is the email. So you can kind of see everybody that was there. Again, this was 2 days ago on Wednesday. You do have your sponsors up top. And again, it was all about private markets. The folks from Texas Capital Bank were there talking about their ETFs as well. So again, got to be on a private markets panel. For those of you that invest with us, you're generally starting with your public market stuff, stocks, bonds, things you can buy through exchanges. Once you get a little more savvy, i.e. move up in net worth and you're an accredited investor, then stepping away with a portion of your portfolio, I tend to say 5 to 20% out of the public markets, which are really volatile, into the private markets where the return's fractionally better. And then they don't move on a daily basis. So the benefit of that is higher yield, and it's less volatile. The downside is they're often illiquid, meaning you can't get your cash out as quickly as you can with a public market where you just sell and pull your cash. So if you're interested in learning more about private investing, then go ahead and reach out to one of us, and I can tell you who we have vetted and who we go through. There's thousands of investments out there. We use about 5 private investments. So we're very selective to make sure that your money's not only safe, but positioned to grow. And often our money's right next to yours, if you will, in the same sort of investment. So Mike, anything to add on that before I let everybody go here for the Friday?
I'll just say the conference was excellent. I think I had 25 meetings, speed dating, and I really appreciated it. Some were people I had talked to before, but got to meet them face to face, and you can just connect and learn so much better face to face. I hate to say it. Let's get more face to face meetings. Love them.
Exactly. And Mike, for those who known Mike a long time, he's humble. He never talks about his victories. He never gloats in public or on the podcast. Okay, maybe he does, so I'm surprised he didn't take the shot. But yes, there was the first ever Ankerstar Wealth advisor only cornhole championship. And Mike and Joel pulled the W there, even though there were some amazing performances on the Steve and David team. Came up a little bit short, but we put that on the docket for next year. Revenge will be sweet. With that, I will let you guys go for the weekend. Have a great weekend out there. We will see you back next week. Have a good one. Bye.